Good morning, Armor Insiders, and welcome to another edition of the Armor Morning Meeting. We are a virtual hedge fund, and I thought you would just enjoy looking at the weekly chart of Pure Storage one more time before we move on, seeing as how we absolutely killed it in that investment. How much fun. God, that stock could be big. But today's a new day. We're going to talk about March 1st. What does the risk monitor look like? The weakest link in the monitor. Let's take a peek and see how it ended the month of February. Let's talk about a couple of stocks that are in the news that were in our portfolio: SoundHound and Tidewater, the tale of two tapes. It's kind of interesting. Then highlighted stock group idea of the day has to be precious metals. Let's talk about gold and silver again. Haven't talked about it in a while. I think the time would be proverbially now or never on that discussion. So, of course, I'll wrap it up with a play-by-play of the Armor carry trade yesterday. And for the week, it's been a week of chop, and we've been stacking chips. And it can all be drawn back to a simple tweak in our execution strategy, turned a chop week into a profitable week. So I'll go over that with you. So don't forget, I'm sharing with you how I run my own personal capital. You are a portfolio manager on the virtual hedge fund desk. So please make your own choices here. And at the end of the day, be the smart money. Okay. SoundHound. There's SoundHound. We're in at 330. We're out at 660. We exited yesterday in the aftermarket. I'll give a shout out and a nod, tip of the hat, if you will, to Erez for helping me make that decision. Erez clearly was the risk manager on the desk in the after hours yesterday, and I appreciate it, brother. Thank you. And so what was the decision there that really helped us exit SoundHound? First of all, we're in at 330 and it was trading above 660, right? So that's a huge move in a very short period of time because of the NVIDIA fairy dust that was sprinkled on the stock. Okay. Then reality sets in, and I held it into earnings. We could have sold it before the news, but I held it into the number just in case. I didn't expect there to be a good number. Okay. Nothing's happened yet. They just had a little fairy dust sprinkled on them, and the rest is all in the future. So the fact that they missed numbers, that means nothing to me. I was looking for some type of collaborative comment to come out that would kind of corroborate what was going on with NVIDIA. Is it more than just a little fairy dust? Is there something else happening? Were they going to announce earnings? Doesn't matter, but were they going to say, and here are the deals that we cut this quarter with the help of NVIDIA? Then the stock would have gone berserk. And instead, it was a total dud of a release. So put on top of that, this thing is a SPAC. You guys who know me know I hate SPAC. There's a huge amount of overhead supply that could get dumped on the market whenever they want. So I smell a secondary offering anyway for the company to raise cash when the stock pops. But even worse, it could be a secondary offering of selling shareholders. The company gets no cash. So done. That was a great trade, made a lot of money, moving on to something else, and is what we're doing. Here's the tale of two tapes. There's an idea I don't want anymore. How about Tidewater? How about Tidewater? Now, there's a company. Now, you know, this is earnings season. If you miss the earnings number and you miss the revenue number, how often does the stock go up? They miss the top line, miss the bottom line, reaffirm guidance, which I guess is a good thing, and the stock is up 6%. That's a stock I can get behind. So let's dive in to a discussion about precious metals again. Here they are. These are weekly chart patterns. Now, the strange thing about these patterns is that they don't look the same, right? Gold looks really good. It's making a high, tight weekly. I don't know about tight. It's a couple of years. But from 2020 to today, a 4-year rising. Look at that. Look at this pennant up here. Look at this wedge up here. Not a rising wedge. That's negative. But look at that pennant up here, right? And if it takes out the highs, makes new high, you could see a pretty dramatic move in gold fairly quickly. Then silver is making a pennant. You could see that, and it's trading near the bottom of the pennant. And the miners are making a wider pennant, and they look obviously worse, trading below all the key moving averages, right? So the gold is above all the moving averages, right? Silver is kind of holding a key level, and the miners look terrible. So why would I put money in the space? I'm not going to regale you with the discussions right now that silver is undeliverable. There's been discussion that silver, there may be a refusal to deliver silver. I don't want to get into that. Those stories are always out there and they don't mean anything until the price of silver skyrockets. Okay. It's good to know, but I have to make a decision on timing of when to buy these metals. And what I can tell you, since I've been managing capital and investing and trading the precious metals since 2005, I can tell you with a fair amount of certainty that you have to own the metals when they're down before the rip, because anybody chasing precious metals on the rip, unfortunately, their experience ends with a different type of rip, like RIP, and they get buried. So you can't do that. So we're at the stage here where it's now or the proverbial never for me. Either I'm going to buy these assets near the stop, as close to the stop as I can, and then step away. And either I get stopped out or the rip starts and I make a lot of money. But what I can't do is stare at it, think about it, wait for it. Then they pop and I go and chase it. That is a different type of rip. And you don't want to be that guy. So look at your portfolio and be the smart money. Do you want an allocation to precious metals? I don't know if you do. I do. I've been doing it since 2005 and I've been making money at it. Here's an entry point. I get stopped out. I go back to cash. I wait for the next entry point. If this is the part where it takes off, then I've got my allocation. I literally have 100% of my allocation right now. I'm not adding any more. Don't come talk to me when they're running and say, hey, let's put more on. I'm not putting more on. I've decided how much I want in a portfolio, and that's it. And I'll tell you what I'm doing. I'm not guessing which stocks to own. I'm not going to go back and forth. It's very simple for me. I trade these things, okay? If you are a long-term owner of gold and silver and you are afraid of a world that gets crazy, then what you want to do is own Sprott physical gold and silver, okay? I get that. But that's not how I'm going to play it this time around. I've done that before, and that's not how I'm playing it this time around. I'm going to admit to myself, I'm going to look in the mirror and admit to myself, I'm a trader of precious metal. I get in, they run, I get out. If I ever get to a world where I get in, they run, and the world gets crazy, I can always convert my position into Sprott physical gold and silver if I'm afraid of what's going on in the world, okay? But that's not why I own gold and silver. So what I'm doing is simply using double, as you know I like to do, double gold, which is UGL. So I get twice the performance of gold. I want twice the performance of silver, AGQ, and I want twice the performance of the mining stocks, NUGT. Now you can look at these charts and see NUGT breaks down, takes out that double bottom. I'm gone. I'm buying close to the stop. Goes down, I'm out. Not a lot of risk there. If this is the beginning of the turn, there's a lot of reward. Same with silver. Silver has been making a nice pattern in here. The stop is tight. Either silver takes off and I've caught it right, or I'm out. Who knows? Maybe we're going to get gold right, and for some reason the other assets go back down. I don't know. Maybe gold takes off. That would be some odd type of market, but I'm buying it close to the stop, which is the 50-day moving average. You can see gold is dramatically outperforming the other assets. I don't know why. At some point that should correct in a major way. I don't know if that means gold's going to break down or the other assets have a lot of catching up to do. So that's how I'm going to do it. UGL, AGQ, NUGT. Whatever percentage of a portfolio I want, I've just allocated to it. So I can't wait to work with you guys again. We'll get the live trading desk started at 9:30 for all Armor insiders that are trading with me. I'll see you then. You can also just get the Armor report, this video, and the captain's log. So feel free to subscribe that way if it suits you and you can't be on the desk all day and you want to kind of do it yourself. And of course, as always, if you find all of this just too much, but you want to have the allocation to carry and macro and special situations, and you want me to do that for you, we can discuss that. I'm happy to see if a relationship works where we manage your assets. So just give me a DM or a phone call and we'll chat about that. All right, everybody have a wonderful trading session. At the end of the day, remember, you are the smart money, okay? Be the smart money. Make your own choices and execute your strategy. Have a great trading session.